Hello, fellow traders. 'Tis I, the Rumpled One. Today, May 15th, Tuesday, the year 2018. Let's talk trading. Just another trading day. I mean, that's the way every trading day should be. Just another day. Whether or not there's news, it's just another trading day. We've talked about consistency. We've talked about, big things, small things. Yeah, on news days, we can probably expect the opportunity to maybe hit a home run. We catch something just right. But for all practical purposes, just another trading day. You go about your day the same way, you apply the rules, your trading plan the same way. You don't really do anything different. Once again, you're consistent. You do the little things, the small things, the things that can get you in trouble. You make sure you don't do the things that can get you in trouble, but you do those small things that can keep you out of trouble. And one of those small things is your money and risk management. Oh, I knew you could see that coming from a mile away, right? So let's take a look here. We've got a breakout across last week's high. Now, I was thinking maybe because we had this double top, it would go down, but you see, that's what thinking will get you into trouble. That's why you trade in the moment, and we know when price hits this line, there's a potential for it to move, and right now, you'd be 29 pips to the good had you taken that breakout. So, I mean, of course, it could have hit there and come back, hairy hindsight, right? But no, this is something that we would look for, in the future because we know this is a wick zone and price doesn't like to stay in the wick zone. I mean, it's just that simple. And so there you have it. And we still have two open gaps here. And you can see here from the week, that's a long way to go. That's almost 100 pips. Now it is. So you see, these two have a long way to go to fill. So I'm not too confident. I'm thinking maybe by the end of the week, still might say that it hasn't filled, but anything can happen. That's why you have to be in the moment and trade. And looking at the daily, there's a nice pop there. If you got that daily high breakout, 62 pips to the good. That's not too shabby. Breakout here, buy zone. You see, you triggered in 1, 2, 3, 4, 5 hours. Your stop loss was never threatened, and there you go. So you see, sometimes you get these. This would have been one heck of a trade. You'd be up what? Oh, let's see here. We've got 54. So you'd be up about 50 pips at the moment. That's not a bad trade. That's one of those home run type trades you're looking for. And you see here, by applying the same simple system day after day, one day you get lucky and there you go. That's not too shabby, is it? But do you expect this to happen every day? Of course not. But when it does, cha-ching, right? Boom. Rat zone. Looks like we might have a rat zone possibility here. We've got a range of 73 pips, so right now we're looking at a turn trade. Right here we could have a possible rat reversal. So there's lots of opportunities to enter the trade right here in the upper rat zone. And we punched in at R3, almost R4 for the day. But we have an open pivot right here. So look for that pivot to be covered sometime in the future. And once again, so simple. We see red at the line after that 3 ball. We can see there's been a lot of selling here. So this could have been a blow off top, and here we come back down. Trading at the line, really, you didn't have many opportunities. You had a couple of fake out reds, so you would have taken a hit there. But one thing to note, we really don't, personally, I don't really like trading back into a wick zone. I like trading out of it, so I would let price get in and go for the outs because that's where the odds are, the statistical odds are in your favor. That's why it's a trade and not a gamble. And the wick zone, once again, you can see it right there, plain as day. And the holo setup, well, this looks kind of interesting. What happened here? It didn't refresh. But you can see here, price went into the holo zone 1, 2, 3 times and came back out. So you see that. You see it's trying, it's like it's basing right around this level. But with this big bull candle, I would expect price to come back either to the halfway point or completely zero it out. And so we'll see what happens. Will price come back down to the 110 level or not? And you can see here, I've had the computer on for a while, so we've got plenty of data, but you see how everything is crunched? That's because I am displaying the max and the min lines. And if you take those off, then that won't happen. So here, if you've got the tick chart, show min max, you can set that to false. And then things open up. But once again, you can see how the indicator resets itself because it's real time using tick data and there's no tick history to load. And once again, using that tick information, tick by tick, we can see if we're buying, waiting, or selling based on whether or not the ask is making new lows to valley or the bid is making new highs to peak. So right here, if the bid gets above the valley, then we've got buying. I think it's a pretty simple concept, and it seems to be very accurate in pinpointing entries. So now we've got buying as the bid crossed above the lowest ask in real time. So you can see here as the bid goes up, the peak goes up. And when the ask drops below the peak, then selling will have resumed. I mean, you can almost think of it as, I guess, price making a higher high or lower low. So, I mean, you've got your peak and your valley, and then in between here is basically waiting to see what happens. Do we go lower or do we go higher? But using it on a tick by tick basis really can pinpoint those entries. So you don't see much drawdown unless you basically pick the wrong direction. So you don't necessarily use this in a vacuum. So you might, if you're looking to play the pullbacks and you see this is green, then you would buy on whenever you get a big pullback. So you just wait and wait, and this would time your entry. Whereas here, in the shorter term, you're saying, hey, it's going down, so I want to trade with the H1 candle color. So you might only pick the sells off of a top, of course, and that's how you can pick up your, 1, 2, 3, 5 pips, and then it starts swinging the other way. You pop out, and then when you get that signal back the direction you want to trade, you can time that entry as opposed to taking heat. Heat meaning drawdown, meaning seeing red on your pip count, your trade count. And once again, we've got these the IRB lines. And no, I haven't forgotten. I'm still going to put out the 3B on the donationals with the documentation for batch 3. But today's May 15th, and it's primary election day here in the great state of Oregon. So I will find out either late tonight or in the morning whether or not I will continue in the race for county commissioner. Not that that has anything to do with trading, but just so you know what else I'm doing at the time. So we can see here we've got this daily breakout. You look at the week, you wonder, is it going to try and zero out this one? We've got wicks here. We're in these wick zone areas here. So we'll see if price wants to go back the other way, or if it wants to continue up here to the 113 area. That would be interesting, or will be interesting to see what happens. And if you look at it on a monthly basis, once again, you can see here this big red candle. It might be trying to zero that sucker out. And you can see here, if we get a breakout of this level, high 110.47, then you can see some more buying. Buyers might pick up the call from right here. Now we just have to wait and see what happens. That's trading. So anyway, fellow traders, I hope that helped. Just remember, it's just another trading day, no different than any other. Don't make it that way. You know, pay attention to what's going on your screen, and if it is a news day, trade accordingly. Because remember, it's not what you trade, it's how you trade it. Let's go drain the banks.